Hey guys, it is Julie here with TipRanks, and today we're taking a look at two strong buy stocks that are trending with Wall Street analysts right now. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two trending stocks. That means that they have been gathering a lot of attention from Wall Street analysts lately. In fact, these two strong buy stocks both have 30 plus analyst ratings, with majority of those coming in just this past week. So we're going to take a look at what it is these companies do, what has analysts getting attracted to them lately, and what they're predicting for the stock's future. Now we found today's stocks using the TipRanks trending stocks page. From the TipRanks website, this can be found under Research Tools under Trending Stocks. You can sort by market cap and sector and check out the best, worst, or most rated stocks in the last 72 hours, 7 days, or 30 days. So today we're taking a look at stocks that are trending in the past 7 days, and the number one trending stock is Palo Alto Networks. Their stock trades under the ticker PANW, currently priced at $234 per share. Their stock has seen growth of 42% in the past year and 25% in the last 3 months. But looking at the past 5 days, you can see a notable jump up here just yesterday. Palo Alto is a global cybersecurity company, and they just reported their latest earnings report on August 18th. And as you may have guessed from that stock chart, they did come out with an earnings beat. For their fourth quarter, Palo Alto reported earnings per share of $1.44, coming in 15 cents ahead of analyst expectations. Now, revenue did miss estimates by just $10 million, coming in at $2 billion, but it did grow 26% year over year. The company also provided their outlook for 2024. They anticipate their billings to be between $10.9 and $11 billion, and this did come in ahead of the $10.77 billion estimated by Wall Street. On the revenue side of things, they're anticipating $8.15 to $8.2 billion, and this was slightly below the estimated $8.38 billion. Their full-year adjusted earnings forecast came in ahead of the estimates as well. Now, following this earnings report, we have seen a flood of Wall Street analysts reiterating price targets, including many raising those price targets as well. Currently, the Palo Alto stock has 33 analyst ratings, with the majority of those coming in just the last few days. One 5-star analyst from Truist recently weighed in, and they increased their price target from $225 up to $275. They said that the quarter was highlighted by strong execution and continued expansion of Palo Alto's network's next-gen security platform in a challenging macroeconomic environment, which the management expects to continue into 2024 and beyond. We also saw an analyst from Morgan Stanley slightly increase their price target, which was already quite bullish. They moved their price target from $302 up to $304. They reiterated their call for a $100 billion market cap within 12 months, which represents greater than 40% upside, and that they see the stock nearly doubling in 3 to 4 years. And an RBC Capital analyst also coming in with a price target increase. They said that the earnings call reinforced the firm's view that Palo Alto remains in a great position to consolidate enterprise security spend, and in turn is also a great way to invest in security at the platform level with expanding margins. Palo Alto's strong buy rating is based on 31 buys and just 2 holds. The average price target for the stock comes in at $276 per share. That would be an upside potential of 18% for the next 12 months. Looking down below, we can see all of those recent ratings pouring in from analysts. On the low end, we do have our hold rating here at 10% and a couple buy ratings with upsides around 6%. And our high-end price targets are well into the high 20s, with some around 25 up to 29% upside. Our second trending stock picking up lots of analyst attention lately is Walmart. The Walmart stock trades under the ticker WMT, currently priced at $157 per share. Their stock has seen growth of nearly 19% over the past year and is up 6% in the last few months. Taking a look at the past week, they are down 1% overall because they had a big spike up here, but they took another jump up here on August 18th. And that, of course, was in line with the global retailer's latest earnings report, and of course, they did also come out with an earnings beat. Not only did they see an earnings per share beat of $1.84 compared to the $1.71 expected, they also had a pretty notable beat on revenue, coming in $2.3+ billion ahead of estimates at $161.6 billion. That was up 5.7%. On top of that, their e-commerce segment saw growth of 24%, largely led by their pickup and delivery services. Looking forward, the company is expecting their Q3 sales to increase 3% year over year and full year 2023 sales to increase 4 to 4.5%. And similar to Palo Alto, we now have a flock of Wall Street analysts weighing in, many of them increasing their price targets, including a 5-star analyst from Citi. They raised their price target to $180, saying that the company's Q2 results were strong across the board and their fiscal guidance was encouraging. They said that the post-earnings share sell-off does not reflect Walmart's underlying fundamentals and that they expect the stock to bounce back fairly quickly. Also increasing their price target was a 5-star analyst from Truist. They commented that Walmart's value and convenience proposition continue to drive wallet share, while automation and ancillary businesses such as advertising and third-party marketplace is boosting their margin. They did add, however, that a lot of positives are already discounted in the stock and that the firm will seek better entry points. And we also heard from Wells Fargo. They noted that momentum is strong and the multi-year outlook remains robust, with guidance looking conservative. Overall, the Walmart stock does come in as a strong buy, with 30 current analyst ratings breaking down to 26 buys and 4 holds. The average price target comes in at $178, which would be an upside of 13.5%. Down below, we can see all of those recent ratings from the past week. On the low end, we do have a few price targets around that 5% upside, many in the mid-teens, and some high-end price targets of about 21%. So there we have 2 stocks that have a ton of Wall Street analyst ratings pouring in this past week following their recent positive earnings report. Let me know your thoughts on these 2 companies in the comments down below, and if you agree with these analyst ratings or not. I always love hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, just keeping you up to date with what those Wall Street analysts are up to and providing some information and entertainment. Please make sure you always do your own research and due diligence and stick to your own investment plan. Thank you guys so much for watching. I hope you have a great day, and I'll see you back here next time.